Channel, welcome back to another analysis. I'm sorry I couldn't make a video for the weekend, but I was busy, and for that matter I'm also going to be staying out of trading until Wednesday because I have some work going on, and but I'll be back in the market from Wednesday. However, looking at where the markets are headed right now, let's begin with US futures. US futures is making a very interesting pattern right now. If you happen to notice, it has recently made, okay, we had discussed this, right? From wherever the fall started until wherever we found our supports. This zone that you see, this was, allow me a minute, this zone around 33,756 is the 0.618 fib retracement level, and any closing above it will definitely mean that the markets have retraced from whatever they needed to, and now we are in an upward trajectory. But until that happens, we cannot be sure. So for that matter, let's just keep this here, right? As far as we don't see a closing above 33,700, we cannot be bullish in the markets. And if you take lesser risks in your trades and you want a more convincing trade setup, then you should wait until 34,000 levels are taken out to go long in the US markets. However, what's interesting in this pattern is, if you look at this, right, this from this zone looks like a double bottom. Now, why the significance of this double bottom is so important is because both the bottoms have been on the 200 DMA, and that is of great significance. So if at all this pattern continues and does break the neckline of 33,700, not only the US markets will see a global bullish and the bullish rally, but even our markets will see a significant bullish rally then. So that's US futures. Now coming to dollar, we had discussed that dollar was trading in this downtrending parallel channel, and ever since the first fake out, we were waiting for this breakout to happen. If at all anyone's trading dollar, I don't, but it would have been a great long entry. And now the little bit of retracement that you see is from the strong zone, right? Because if you notice, 28th March, 29th March, 3rd of April, 10th of April, the market has failed to close on a daily basis above these zones, right? Above the 102.76 zones. It does try to make an attempt to go further up, but there's no significant closing, and it only closes above, we haven't seen a closing till now. So if at all we see a daily closing above 102.76 levels, then we will definitely see some time-wise or price-wise correction in global markets as well as our markets. So keep an eye out on dollar to plan your positional trades in our markets. Now to begin with, let's start with Banknifty. And since I was absent to give out the weekly view, I have something to share with you. And however, we had discussed this in the last week's weekly analysis. If you notice, on a weekly time frame, the markets have always failed to close above 43,630 levels, and for the first time in ever since the time of Banknifty, the first time markets have closed above 43,630 on a weekly, and that is a strongly bullish signal. So that, considering that, I am more bullish in Banknifty than Nifty. But now where the problem arises is if you're trading all-time high zones and you really don't know where to book your targets. So you could use indicators like pivot points or fib extensions or whatever your setup helps you out with. But I would only recommend that if at all you're intraday trading all-time high zones right now, just take whatever the market gives you. Do not expect to make 1,000 points because a healthy retracement is due, and whenever that does happen, we will capitalize that. So on a daily, if you notice, right now we have retested the all-time highs, and the urge to short the market just because we are retesting it and we are analyzing and predicting that it will just suddenly crash from here, it doesn't work like that. The markets don't work like that. You need the setup to walk up to you. You need the markets to give you a setup before you take any overnight or positional trades. So as of now, if you look at daily, there's really no weakness in charts. Banknifty is super bullish on a daily on almost every time frame. So until you see signs or hints of weakness, we are not going to short the market. Now if you see a bearish engulfing candle here, or like a candle with a very strong rejection from top, right, in that case, yes, we will plan to short the market, but for now there are no positional short trades on a daily, right? Now moving to a smaller time frame, intraday, how are we going to trade tomorrow? If you have been noticing in my analysis, I have always spoken about this very strong parallel channel, right? The two purple ends of the channel that you see, the upper end of the channel, and that's the lower end of the channel. So the markets have respected that for the longest time now. Now what's interesting over here is how do we plan our intraday tomorrow, right? On a 15-minute time frame, the three scenarios that we're going to discuss is going to be a flat opening, a gap down opening, or a gap up opening. So as far as we open flat, anywhere between 44,000 psychological levels and 44,150, there is absolutely no option buying intraday trades. We just have to wait for the market to give us direction. That's in case of a flat opening between 44,000 and 44,150. Now, if you open slightly negative biased or negative below 44,000, our first intraday short trade would be our entry with our stop loss above 44,000, and and if you're a risky trader, like if you can manage and accept some risk, then your ideal stop loss should be 44,150 below 44,000, because your targets are definitely around 43,750 from there. So if you're risking around 120 points for a target of 250, 300 points, that's a favorable, very amazing risk reward. So below 44,000, if we see any kind of rejection after opening below it, or open flat and break down 44,000 on 15-minute time frame, our first target is gonna be this yellow colored uptrending trend line that you see. Not of great significance because it's intraday time frame. It could break. In any case, that breaks, right? In any case, your perfect short entry for intraday would come at below 43,750. Any 15-minute candle closing below 43,750. Our first target would be around 43,600, which would also align with the 215 EMA, 15-minute 200 EMA. And if we do happen to close below that, then we could hold on to our targets until 43,360 to 43,260, right? This zone where the lower end of the parallel channel meets with the horizontal support. So this could be a very strong support zone. So these are our targets, right? Below 44,000, our first target is 43,780, 750. Below which 43,600, below which 43,350. So these are our targets on the short side. Now, how do we trade a flat opening that tends to break the day high, right? Day high from today. If you open flat to slightly positive biased, but below 44,150. So the moment 44,150 is taken out on a 15-minute time frame, we are gonna initiate a long positions with a stop loss below 44,000, because the targets would be, we would tend to book around the upper end of the channel, which is 44,400, 44,500 levels. So this is also a nice risk reward, but let the market give a 15-minute closing above 44,150 and only then initiate your longs. So I guess that should be the trade plan for Bank Nifty. Now coming to Nifty, let's begin with the daily time frame. On a daily, Nifty has been rather consolidating since when is this? This is Tuesday. I don't think this is movement. I don't think this is very bullish in nature. It's rather consolidating between an important zone, because there was a massive fall from here, right? From where the markets have tested their highs today. This was on the 21st of December, from where in 3 days, from 18,430, the markets fell down to 17,730. That's like 18,430. That's like almost 600, 700 points. That's a massive fall. So as far as we are trying to play the bullish bets, it would be nice if the market consolidates here. And after such a overstretched rally, right? If you notice, from around 17,850 from 27th of April, we are now at 18,450 almost. That is 700 points. So 600 points in fact. So give the market some space, allow it to consolidate. Now we have a very simple trade plan. We are not going to initiate any overnight positional longs in Nifty until we see a closing above 18,440, and I'm talking only daily time frame now, where our first take profit would be 18,527 followed by 18,600, and we could eventually trail it all the way up to the all-time highs of, there's also a gap pending here if you notice, right? 18,750 to around 800. So we could trail our longs until then if the market tends to be in a bullish undertone. That's on a daily though. Now what's important here is what we discussed the last time, the hourly time frame in Nifty, right? Because the channel has been beautifully respected. So if at all you have this plotted on your chart, I really hope you do. And in case you don't, do mark it on your hourly time frame. And if at all you know how to trade hourly time frames in Nifty, this would be of great significance, because every time we've approached either the lower end or the upper end of the channel, we have always respected the boundary and we've gone the opposite way. So now in any case, if you're an hourly intraday trader, any hourly opening below 18, say 375, our first immediate target when we are shorting the markets would be 18,300, below which we could wait until 18,230, below which the fall could be rather stronger. It could go down all the way to retest 18,000 levels. Now again, some food for thought, right? You notice this candle, the hourly candle on the 5th of May 215. A lot of people would consider that why is this outside the channel and how is the channel still being respected? The whole point being that yes, we closed below it, but the succeeding candle that had to open the market, opened right within the channel and then continue to respect the channel. So this could be considered a fake out for everybody who was short just looking at this breakdown, who wanted to short 18,000 and play for whatever 17,800, 900. They all got shorted, and that's why the market propelled up from 18,130 all the way until 18,218 the same day. So this is how you understand traps. So that's hourly. However, if at all you're comfortable trading 15 minutes, our trade setup looks something like this. We are not, okay, the three scenarios that we are going to discuss is a flat opening, a gap up opening, or a gap down opening. In case of a flat opening, as an option buyer, intraday option buyer, positional option buyer, whatever you are trying to play out, you are not going to take any long option trades, that's buying calls or buying puts, until we open between 18,350 to 18,450. This 100-point range is mad noisy. It could get you stopped out. And as an option buyer, it could not be the best favorable risk reward for you to take a trade, right? So flat opening between 350 to 450, we're going to ignore the market, wait for the market to take direction. Now, where does the market take direction? Let's plan the long side first. If we see a gap flat opening and see a 15-minute strong bullish candle closing above 18,450, we could play out the longs for 18,527 and 18,600. And in any case, 18,350, a 15-minute strong bearish candle closing below 18,350. Our first target is going to be the 200 EMA on a 15-minute, which will align with probably the low of the 15th May first candle. It will probably align with this. That's around 18,280 to 300 levels. So below 18,350, we are 18,280. Below which we are gonna test 18,200, and below which we could become positionally short. But let's wait until the market gives us that space to play out, right? Just because we are approaching all-time highs, I do not want to put in all your guns and just short the market just because we are retesting those levels. That's not the way you're supposed to trade. Wait for the levels and setup to walk to you, and I guess that's it for now. I guess that's the trail plan for tomorrow, and all the very best. Protect your capital, trade safe, and I'll see you guys with my analysis video tomorrow. All the best, guys.